All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Pre-New session. I'm your host for this morning's session, Benny Allen, and I'm definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in this wild and crazy Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If everybody can hear me loud and clear, do me a huge favor, drop me a one in the chat. Let me know that my sound is good. I see the ones come in. I appreciate it. Beneath, good morning. I see you. All right. Thanks a lot, everybody. So as always, we want to make sure that we start the day, right? Taking massive action when we look at these markets, right? Making sure that we're accepting all possible losses before entering a trade, preparing us for any outcome. We always want to center ourselves in body, mind, and spirit, ensuring a balanced approach to trading. We want to trust in our education, strategy, trading skills, and intuition. We want to make sure that we always imagine our trade successfully materializing and that we are constantly and consistently obeying our trade strategy, avoiding decisions based on greed or fear. And we want to make sure that we are never looking back or stopping once our trade has commenced. So, hope everybody has had a great week. My apologies yesterday for the last minute cancellation. Had to fill in for one of my colleagues at work for a presentation that I had, and that was last minute. So I had to cancel the session. So my apologies first there. Had some link issues, right, with Zoom. We try to figure out why it happens all the time because we extend the links out permanently, but for some reason, right, when they make the updates, sometimes they get expired. So we should have that. We should be all good there now. So sorry about that. So yeah, let's talk about some things, right? So second, my screen. Okay, so dollar slides, right? To a to a 3-year low. So the dollar index fell over 1% to 99.2, its lowest level in nearly 3 years as investors continue to pull out of US assets, escalating trade tensions, and growing concerns over the broader economic fallout, particularly for the US, have weighed heavily on sentiment. On Friday, China's finance ministry announced plans to raise tariffs on U.S. imports to 125%, up from the previous 84%, in direct retaliation for Washington's decision, right? Trump's decision to hike tariffs on Chinese goods to 145%, right? Yeah. So big issues selling out at dollar assets, right? U.S. 10-year Treasury yields post steep weekly rise. Right. So I want to go over, see if I can switch my screen here. Um, Switch my screen here. Take a look at a quick summary so we understand what's going on. Because we've got major issues. So um let me go. We share my screen. Come back to screen one. All right. So summary, right? Treasuries tumble. Investors question U.S. safe haven status. Think about that now. Safe haven status amid tariff turmoil. So U.S. Treasury bonds, long considered the bedrock of global financial stability, are experiencing a significant sell-off. Investors are shedding these assets, traditionally seen as safe havens, due to escalating trade tensions and erratic economic policies from the Trump administration. This shift is causing yields to surge and the dollar to weaken, signaling a broader loss of confidence in U.S. financial leadership. So, some key points. Long-term U.S. Treasury yields have spiked, with the 10-year note reaching 4.5%, marking the largest weekly increase, right, since 2001. Price down, yields up, right? Trying to increase that demand, trying to entice, right? The yield is going up. Dollar decline. The US dollar has dropped to a decade low against the Swiss franc as investors seek refuge in more stable currencies. So, for those of you who have been with us for a while, it is a reason why we put forth the training that covers a lot on fundamentals, understanding what your safe haven currencies are, understanding risk on and risk off, so you all are prepared for this, right? The Swiss franc has, I think, what is it, 5%? Shot up 5%, right? Safe haven shift, traditional safe haven assets like gold and the Swiss franc gaining more favor, with gold hitting a record 32.19 per ounce. Market volatility, the S&P has fallen over 12% since the announcement of new tariffs, reflecting heightened investor anxiety. Global impact: foreign investors, particularly from China and Japan, are reducing their holdings of U.S. debt. People forget that all the time. Sometimes the arrogance of the U.S., they forget that China and Japan hold a lot of U.S. debt. Okay. Uh, Market implications: the erosion of confidence in U.S. treasuries could lead to higher borrowing costs domestically and reduce foreign investment. This scenario may pressure the Federal Reserve to intervene, potentially through quantitative easing, to stabilize the markets. Okay. But because you all are so prepared, right, you can make money either way, right? Because you not only understand technical analysis, but fundamental analysis, you can make money regardless, right? You can make money regardless. Or based on your fundamental analysis, you can say, you know what? Like we've talked about, especially coming into this year, right? Wandosa, right? We talked about it. Sitting on the sideline, which in your cash until you feel more confident in things. That is a play, right? That is a play, right? So we wanna take a look at all things from all angles, right? And be confident in what we do, right? So Brent falls for the second week as U.S. China trade with worries mount. China car sales, right? 8.2% in March. China car sales surged, right? What are we doing here in the United States? Okay. European stock slide as U.S. trade war, China trade war escalates, but the euro is through the roof right now, right? So we'll take a look at those things. So people moving out of U.S. assets into other safe havens and other currencies, right? Any questions so far on the fundamentals, right? This is why we do what we do. This is why we cover them all the time, right? This is why we try to master the fundamentals. Yep, GM layoff, yep, to low EV sales, and part of that, but when you look at like in China with EVs and how well it's doing. Part of that, Joy, is like the low sales. Part of it is, you know, people aren't ready to move. Part of it is marketing and propaganda. Trump still talking about coal, like clean coal, like right what he was doing the other day, like and people buying into that stuff. But this is where the world is moving, right? The world is moving, and so you had one administration that was trying to push us towards that, but then you had another side that was pushing a ton of marketing, a ton of propaganda against that, and so we stay in the Stone Ages. We stay in the Stone Ages, but the rest of the world is moving. The rest of the world is starting to make deals around the United States, right? And so you see where things that are traditionally for investors, right? And this is why investors are like, hey, man, look, you need to do something because those traditional things like bonds and other US backed securities, are not performing well, right? So you look, we see gold, we see the yen, we see the Swiss franc, we see the euro. So as traders, we know it. We know exactly what to do and what to be looking at. Right? Everybody doesn't have that advantage. Right? So it's definitely a blessing. But that I mean, low. Think about it. Low EV sales in a time where China's car sales is 8.2%. China has a battery now for their cars. What did they say? It could charge the full capacity. Somebody help me. What, 5 minutes? Something like that. Something crazy. Uh, that I saw recently. So it's like in the United States, like what are we doing? Right? What are we doing? So
Hey, Benny,
yeah,
I know a lot of people are pivoting their strategies, like, for instance, mortgages, because mortgages had got like a little boost and people was applying, but now a lot of people are not applying. So what I'm seeing what the agents are doing is targeting previous homeowners for refinances at the lower rates and just giving it to them.
wow. Wow. Wow, you serious, huh?
I just got refinanced. So
They, they just out here getting it done, huh?
yep. So it's like people got to learn how to, they're picking their battles and they're pivoting their strategies and just to stay above ground.
Yeah, yeah. So Shay should let us know that. Yeah, it's um Jeremy's iPhone subprime to 2.0. Yeah, yeah, Jeremy. Yeah, yeah. So you got, read the fine print, right? Read the fine print. You remember back in the day, George Bush, like everybody should own a home. Everybody make a way for everybody. And bam, right? Years later. So yeah, yeah, reading the fine print. You know. So we'll see what happens. But yeah, so moving over, these are interesting times. So moving over to the Forex factory, because you could be looking at a huge, because now people are starting to wonder, is this fastly becoming a permanent shift, right? The one thing that the US still has, which is which is why we have trade deficits in the first place, everybody, is the US has a strong consumer. That's why we run trade deficits, right? So this whole mess, right? There are some areas where, yeah, there's too large of a trade imbalance, but this whole mess that we've got to trade about what we are a consumer nation. That's the one thing that we've always held in our back pocket, and why people want to do business is because of the U.S. consumer. We buy, right? So we still have that in our back pocket, but people are starting to wonder, like, man, you know, coming out of World War II, the United States gained a huge advantage in regards to currency and being because we were the only ones that pretty much weren't decimated, right? But now people are starting to wonder, like, is the global switch in now, right? So I have to pay attention to it over the long term to see what happens. But we have to document and remember these times. So yesterday, of course, CPI, right? You wouldn't even have known because everything's been about tariffs. But of course, CPI came in, right? At the forecast is 0.3%. And the actual, right? And look at that in the red. So negative. So for CPI, so it's like nobody's even really seems like they're really talking about that right now. On CPI now we've got there's a lot of journalists relating to World War II in the articles. Oh yeah, absolutely. Jeremy, the artisans who, yep, is playing out. It is. You're right about that, Jeremy. You are right about that. And so are you, Joy. A lot, yeah, because that's the Joy, that was a historical shift, right? Coming out of World War II. you know. We had a bunch of FOMC members speak. I got to get caught up on that. So we'll talk about that, today. But GDP, look at that. Forecast of 0.1% came in at 0.5%. Core PPI is due out at 8:30, right? And then the sentiment. Big reports, but how much of a shock and an impact will it have, considering everything is about this trade war? Um, we see here Lagarde 6 minutes ago. ECB is monitoring and ready to use instruments it has to produce price stability because that euro is moving to the upside. Um, ECB is monitoring tariff announcements and stands ready to use all available instruments if necessary. All right, everybody's on high alert. Market infrastructure in Europe is functioning in an orderly fashion. If I were aware of any U.S. intervention in the treasury market, I wouldn't tell you. Wow. So yeah, that's that. So moving on, right? I'm gonna cover a lot fundamentally because that's what's driving everything. Dollar down, right? Dollar down. Hardly any pullback. Global sell-off in U.S. assets. That's what it looks like, right? So all D extensions hit. Still hovering below trend line, right? The angle and the trajectory to the downside has steepened. You see here, see our original trend line, and how we could come in and we could drop another one now, right? So we're down. We're down on the US dollar. So coming down, taking a look at these dollar pairs, we take a look at the dollar Swissy down, right? Down, right? So what we want to look for are pullbacks and continuations. 4-hour chart, we don't have a new one yet. Right. So you saw the spike up to the 382 down. That tells you who has control of this market for sure. Right. When you're only getting slight pullbacks and the market is accelerating in this downward direction, right? You know we're bearish. You know we're bearish. So that's your 4-hour chart there. 1-hour chart. The crazy spike that drove the market. Wow. So we just have to hit the reset button on our fib. All right. Let's see how high. This is the I'm sorry, it's the 15-minute. Let me move up to the one. But that's the 15-minute that's climbing. So if you're trading that there, and let me get back to my one. Got an 80-20 on the dollar Swiss. Right? 80-20 on the dollar Swiss on the 1 hour. So if I'm looking at this, right? Definitely target one. The way the market has been accelerating to the downside, don't know if you get target two, right? But you never know these days. Right? Might make another crazy announcement and get more billionaires paid. Who knows? So this is where we are here on your 1 hour dollar Swiss. You do have an 80-20. Of course, we use an additional confirmation, right? Trend line breaks, things of that nature. But what we need is to do 80-20 move to the upside. We know how that plays. Boom, target one, target two. But if we are waiting to remain short, we know how to play that as well, right? Same old, same old. Nothing changes. Push to our high price in our zone. Look for price to fall apart again. Okay, so we'll continue to keep an eye on things. All right, but you do have an 80-20 on the dollar Swissy right now on the 1 hour chart. 15-minute chart that we looked at first, price is climbing in that zone. Any questions on the dollar Swiss?
No.
Yasina, thanks for the email. I appreciate it. Appreciate the heads up on that. We had to get everything updated again. So with our Zoom. So thank you. Yeah. Dollar yen.
You're welcome.
Yeah, no doubt. Dollar yen. Short, right? We got a weekly level coming in here. We want to pay attention to. And if we go down to the daily, did anybody play that short off the daily that we marked up? Yes, no? Because you're in the money if
Yes.
you did. Who said that? Jeremy?
Yeah.
Awesome, man. Awesome. Congrats. Drop some sevens in the chat for Jeremy. Taking a shot on that dollar into the downside. Okay. And so we've been talking about yen strength for a while. Ryan, from the longer term perspective of eventual rate hikes, right? Third quarter this year and just the anticipation of that. But we're also talking about it from the investment strategies that we heard about coming from uh, one of the financial analysts from one of the investment firms listened to on Bloomberg saying, hey, during these times of possible, stagflation, things like that, that the yen typically strengthens. And now, because of the safe haven status, because of all the uncertainty in the trade war, that yen is strong, the dollar is weak. That's the ultimate trade right there, where you've got a one currency that's fairly strong and one that is weak. It is easy to see that the DXY is headed down and that Japanese yen is strong for several reasons, right? And so we're closing in on that D extension there. That is off of that high, right? At its lowest point, that's an 897 pip drop, right? And so we've got just under 1,000 pips to that D extension. That is a monster move. So if you're coming down to the lower time frames, right, and you're trading this, set this target, we'll bring this down, right? So we're closing in on it on the 4, right? So you got a 50% pullback there. You pretty much double top there, right? That huge spike. That's why I really like a 4-hour chart, because it's with the fibs. It's because a lot of times you'll get, for example, on a 15-minute chart, oftentimes now your probabilities and your strike rates and things like that will still play out, but it's a larger, slower move. But like a lot of times, these major spikes like that, you're still within the AB boundary. Whereas on some of your lower time frames, your A gets taken out, but with a spike like that, right? But so this is moving down. So anytime we're looking for pullbacks and continuations at this point. So for example, look at that major spike, how it took that out to the downside. So in your 4-hour chart, you're still within your AB boundary, right? It's just a larger time frame, less candles, right, and a cleaner move. So you look how that spike took that out. Look at that. Look at how that looks on the 4. See? And here you got taken out, so you would have to reset, right? There's your move. There's your move. Okay, to the downside there. So here, right, we expect that to hit that 141, 46. That daily extension is right on a 1-hour extension. You got this is shaping up, right, to be a a lower high. So we expect this turnover here for like a secondary entry or whatnot. That's 100 and almost 150 pips. We expect that to go. Right? We expect that to go. All right. So that's the dollar yen. Okay. So here you have it, right? Lower low, lower high, lower low, potentially here, lower high. Okay. That's on the 15. We'll take a look at the 1 on this. Here. So there was that spike. You got a sub fit running there with us, a sub fit 80-20, but I don't know before we reach that that extension. Right? I don't know about that one. On the sub fib. This is your main fib here. Chasing this extension at that point. Right? So that's that on the dollar yen. Bears are out. Congrats again, Jeremy. Anybody else that shorted? Right? You're definitely in the green on that one. Let's take a look at I want to go up to our euro dollar scenario. And pushing bullish. Finished out, right? You hit a daily D extension on that. It's crazy what a difference, a new administration and major shifts in fiscal policy can do, right? It wasn't too long ago where we were thinking where that dollar was strong and you were thinking the euro back to parity. Now look at what's going on, right? Total opposite move because of the fiscal policy shifts of the new administration, right? That dollar's been tanking since the new administration came on board. Tanking. And so this is a euro dollar on the daily chart. Didn't even make it to the 382 on the 4. Shot straight through. Okay. And this was a beautiful ABCD swing here that completed. Beautiful ABCD swing. And now we've got a new AB boundary, right? So we're at a 118 zone, right? See if I wonder if we'll push up and test that monthly level. Right, so that's a possible future 80-20. But overall, we're bullish, right? So if you're just looking to buy against the dollar, you need a low price, right? We're not buying from there. We need a low price. Any questions on the euro dollar?
No.
All right. Take a look at the pound dollar. Right? So it becomes one thing about during these times is it becomes obvious where we want to be long and where we want to be short for the most part, right? Here's your pound dollar swing. That's the daily. Look at that. Since January. Again, since the new administration has come in, the dollar's been tanking. The exception of your major move down with everything, right? The volatility. And look how quickly that recovered, right? So this is recovered off this low at the high point over 400 pips. That's bullish. All right. So that target at 136, we hold firm to that. We move to the lower time frames to look for any type of opportunity to get involved up to that 136 level. So we'll pull that down. Man, what a difference an 80-20 makes, right? Gone. That's taken out, so we need to reset this, right? This is going to be our leg to the upside. And we're going to try to track from there. And taken out by that huge move to the downside. So clean this up a bit. We'll leave that there, let that reset. We'll come down to the 1. It'll come from that same low. extension hit. All right. Weak dollar. So we need our fibs to reset. Okay. So that's where we are on the pound dollar. Switch the yen that we've been paying attention to. Off. We know that switch yen is a big mover, right? So TP1, 412, TP2, 574. At the high, almost 800 pips. Switch yen.
Nice one.
Oh yeah. Oh yeah. Really nice one. So if you're able to play that, right, at least target one, great job. Great job. Dollar CAD. Take a look and see what it's doing, right? Tanking. Moving down. This one is still within the AB boundary. Right. But you can see here how we had this previous markup. We didn't make it all the way back. We turned over just shy, and then we continued down. Right, so that 80-20 zone started to climb, turned over. Dollar's too weak. 4 hour, right? But we know the CAD is not super strong either, especially, domestically, issues fundamentally, showing major signs of weakness. But also, right, it's a commodity currency, really impacted by oil. And we know oil prices are down. Okay. Risk off scenario, demand concerns, you're coming into an 80-20 zone here. So depending on what happens next, fundamentally, with the dollar, we could possibly see that 80-20 play out. Right? Neither one of these are too strong right now. So we could see a move back to the upside. But other than that, any climb long, that dollar, people continue to sell out of dollar assets, eventually we'll look to move back short. But we'll see. We'll see what happens there. All right. So anywhere out of this zone, because you've got a monthly level here where we're holding up at this 118. So we could see a reversal there, right? But we're looking for a move back to the upside. So that's your 1 hour chart on the dollar CAD. Any questions on that?
No.
All right. So that's where we are. I didn't take a look at this Australian dollar versus the US dollar because the Aussie is weak. So kind of got an opposite effect going on. All right, you see that move up. Aussie daily chart. Let's see what we've got going on here. Right. So your 4 hour, you're still within your AB boundary. Right. So we'll see if that holds. This is one that I definitely haven't been looking to play because we know we have dollar weakness. We know the Aussie is weak. It's a risk off situation. It's a risk off situation. So need to read more on what's going on. Let's see. We know we can see it on a chart that is moving up recently, but I want to know what's going on. Let's see. Despite the 90-day tariff reprieve, markets remain cautious. President Trump's trade policies could tip the U.S. economy into a recession. The Trump administration also confirmed cumulative tariffs on China, 145, prompted fears of further retaliation from Beijing. 84% levy, so that's late because we know they moved it up higher than that now. China, a key buyer of Australian commodities, remains Australia's largest export market. Domestically, uncertainty surrounds the timing of the Reserve Bank of Australia's next rate cut, as trade-related risk could cloud the economic outlook. Markets are currently pricing in 25 basis point cut in May. around 120 basis points of total easing. So we'll see. We'll see how high this wants to climb in the zone there. We'll look for any type of breakdown. We'll see who wins this one out. Not ready to make a call on that one yet. So that's where we are on the with our dollar pairs. Looking at our indices. Here we go. Right. S&P, who knows? Been structured to the downside. We got that wild spike on the tariff reprieve. But you know, if you listen to Bloomberg, European session, Asian session, still a lot of selling off, right? Stocks, US assets, and things like that. So right now, I'm looking still bearish, right? Here we are on the daily. Right. So still within that AB boundary on the daily. So, you know, we'll see. We'll see what happens. But this is where we are. Crazy bullish day. Right now we're kind of just really at a standstill on that type of price action right there, seeing what's going on. What do you all think? Somebody give me some feedback. S&P 500 up or a continuation down?
Can you put the cloud on? Because I was just looking at it.
Absolutely.
Down. Global macro
Yeah.
sentiment.
Yep. Yep. Yep.
It's too much uncertainty, but look at the 1 hour.
Yeah.
If we can get above, I'm looking at the 50 and the 20, and hopefully we can get a golden cross.
Yeah. So in the short term, a continue move to the upside.
Yep.
Possibly, right? Possibly. But I look at fundamentals, you know, so if you're trading on those lower time frames, yeah, right. You can make plays on the short-term volatility. But looking at the fundamentals right now, like Jeremy said, the sentiment, long term, any move to the upside that you might make a play on and get paid from it, right? Shorter term targets is just a retracement right now until something changes fundamentally, right? But you know, anything, any move, any retest maybe of the highs is just a continued like a retracement. But I ultimately think that it'll continue down. It'll continue, or it's gonna move sideways because of the uncertainty, like you're saying. Like you said in the beginning, Joel, right? So that's what I'm looking at. But yeah, short-term volatility in the lower charts, you could get a retest of, you know, the high that it put in, right? But you can tell right now there's a bit of a fight going on, right? So we'll see when the market opens. But like I said, listening to the it's been pretty fun, right? So I'll actually on YouTube, right? Because it just tracks everything. So it just automatically now on YouTube, because I go to Bloomberg so much, it just pops in. So if I don't catch it, the Bloomberg session live, right? Like the Asian session, European session live, as soon as the live session ends, it pops up in my YouTube for a recommendation because they upload them so fast on Bloomberg. So a lot of times, like as I'm getting up, you know, early in the morning, I just put my earphones on and listen to the report outs, right? And they're like, you know, 40-minute sessions, hour-long sessions, you know. So you can listen to and get a beat on what happened overnight with the market. So pretty cool to be able to stay in tune like that. Love technology. I love the age that we're living in, right? In regards to tech and just the ease of access to very powerful information, right, to help you make decisions. So that's where we are on the S&P daily.
That's
Yeah,
informative stuff, information that you get on Blue. I listen to it a lot, so throughout the day, but it's very
yeah.
important to keep you very up to date with what's going on in the markets.
Oh yeah. Oh yeah. And like in real time, eh?
Yeah.
You know, in real time, it's very powerful. It's
Mm.
very powerful. Like, there's sometimes where, like, I could take those also too, right? I could take those video transcripts and turn those into summaries. Like, it's unbelievable to access the information that we have, everybody. I could literally yank a transcript from a YouTube video that I'm watching from an entire session and turn it into bullet points and highlights, right? And turn it into an article. Like it's unreal the amount of information that you could take in and absorb and really simplify it and break it down. So, uh, yeah, and then anything that I get or read, like I'm constantly sharing it. So continue to pass it on to everybody. Reset bearish, too much uncertainty still. I believe that to be the truth, right? Um, Joy said she did. Yep, you put an article. Thank you, Joy, for doing that all the time, putting articles in the chat for us in the community on the bear market for the time being. Like I said, there are traders, Joy, right? I tend during these times to knowing that we could get those short-term spikes. I tend to like see here on the 1 hour on this US 30. I tend to really because there are traders who are making money right off of these moves. But for me and the way my emotions work, I tend to zoom out because I just knew myself over the years get too emotional when I see those volatile spikes. Like, man, I missed it, or or I was the wrong way on it, or so I tend to focus more on that bigger picture, higher time frame thing now. But are people making money, down on those lower time frames, tracking volatility? Yeah, they are. Absolutely, they are. But this is not my game for sure, for sure. So, um, here's the US 30. Like you said, Joy, like reset, too much uncertainty. Um, the sentiment is bearish overall, but when you see daily candles like this, because of the momentum has been so wicked, right? In one way or the other, you can see our daily stochastic is in the buy zone, but then you look at your candles and your price action, and that tells me that we can move in up or down in a range for a while, right? And when you see that with the candles the way they are, with my stochastic being in the buy zone, knowing that the overall sentiment, like Jeremy said, is bearish. Like the article that Joy posted is bearish. Like everything, uh, all of the report outs is bearish. You get to just people's emotion naturally wants that market to go up, right? So you may be in a fight for a while. Jeremy said that's for the 10 pip a day traders. Yes, yes. And I just don't want to fight with the algorithms at that level because that's what's running the show down there. I don't care how many indicators you put on your chart or what new formula. You're fighting against a monster down there, you know. Um, like I always say, is it fun? Do I get in that mindset from time to time and want to play around down there and make quick money? It is a recipe for high blood pressure. I've been there. Yeah, like that thrill is fun, man. When you can turn some stuff over. Even if you're trading with a smaller account, and it's like, man, I just turned 10 cents into, $8, $10, $15, Uh, but for me, that rush to do that has dwindled quite a bit. Quite a bit. So this is where we are on a daily. So just like how we tracked it on the lower time frame, like this NASDAQ, right? On the one. Look how that shot up on your 1 hour chart. Right? Blew up everything. Blew up everything. Whereas on your higher time frames, you're absorbing that. You see that there? You're absorbing that within the AB boundary, right? It handled that 4-hour chart handled that spike. Right? Joy, I love the rush. Yeah, and listen, if that's your thing, like I say, people have made plenty of money, but boy, it ain't. It's not me. But that's why we cover a little bit of everything as far as time frames, because I know it's not just about me, right? So uh this is where we are. So when we see those, Reese has 80/20s on the 30-minute or on the 15-minute or on the 5-minute .net sometime, we look at it and we cover it because we know that's some people, that's where they are. That's where they love to trade. Then that's cool. Here we are on the 4-hour, looking at that. So it took that spike without taking out the A. And then take a look at our daily, and we're looking the same. Okay. So one of the things, right, if you're looking at these higher time frames, one of the things you could do seeing this, because we know anytime you get a large spike in a candle, whether it's up or down, what do we always like to say? It's going to try to at least test 50% of that candle. You see here it came in, right? This is something that we noticed over the years, right? And so now, usually when you get it, that it takes a lot of volume to produce this candle, right? Which is why they have a lot of people in the government under investigation right now, by the way. Right. You see, you're seeing volatility spikes minutes before the man announces a pause in tariffs. Go figure, right? But one thing we can pay attention to from this daily is to see where we are once the stochastic reaches the sell zone. Yeah, I did see that, Joy. Well, here's the thing. Like they were saying, it don't matter what you try to hide because at some point, because they are federal officials, they have to release and disclose that, right? So you guys that follow here, you know how they on oh, it was market manipulation, 100%. Um, he said that blew my mind, Benny, even for Trump. He ain't even trying to hide this corruption. No, man, they listen. They are breaking laws, just like he did the last time he ran, just like he's doing now, like times 10, because he learned from the first time that he was in. I'm not putting these traditional folks around me, right? And so there's no guardrails besides the courts, right? And so the thing is, as public officials, right? So if you guys follow social media, a lot of times you'll see stuff pop up like the Pelosi trade, right? Uh, and that's politics, right? Conservatives saying like, look at this lady, right? She's on the other side, but she's getting rich too, right? Well, they have a right to have portfolios and stuff, but insider trading is illegal. And guess who have put stipulations in place for that not to happen? President Barack Obama when he was in office, right? To try to shut down insider trading amongst politicians. But, right? They're walking right through it. So it doesn't matter, right? It doesn't matter at some point, right? I think within 45 days or something like that, they have to release their transactions. So eventually people are going to see when, and what assets that they traded. Right. And it's probably going to come out that they did what they did, right? Knowing right before he was going to make that announcement. Right. So I like, but the media is complicit because they don't stay on top of these things, right? Like, what? Like, how does he launched a meme coin and then it tanked, and they just kept right on through the news cycle and haven't mentioned and said anything about it since. He launched a meme coin and it tanked. It moved him into a billionaire status, but a lot of people lost their money, and the media just keeps rolling on through cycle after cycle, right? And they're supposed to be, what do they call it? The fourth estate. It's not happening right now. So is so they continue to do what they do. But what I want us to focus on, and what I try to tell all my friends, it is what it is. Try to make money. Try to figure out how you're gonna make money, right, from it. That's just where I'm at. Right? At my age and what I've seen, that's just where I'm at this point. What am I? How am I gonna make money? And now everyone feels they need to pull their 401k. Right. I have a friend that is an asset manager. She had to put out a video, telling everybody like, hey, the markets go up and down, and just hang in there, because I know there's a lot of phone calls being made, right? Just like you said, Joy, like, pull my money. Right. Pull my money. So it's
I
a
mean,
tough
they
time.
literally pulling out their whole portfolios, and somebody saying, I don't even lie, Joe. I seen you be posting a lot. But what you think? I said, ride it out. You be all right.
Yeah, it's those folks with the 401ks. Here's the Nikkei, by the way, right? We'll see if it moves. If it's that could possibly form a low and push up a little bit higher here on the 4 on the Nikkei, right? So that's a 80/20 there, right? So that may recover and push higher with everything that's going on with Japan and everything right now. So we'll see. We'll see if that can make some sort of higher correction there, right? But we know that yen is strong, right? We know that yen is strong right now. So we'll see if that could make make a higher high there. That's what I really want to keep an eye on there, right? To see if we can get it to move up. But the issue, Joy, is that is those folks who are close to retirement that lost such a colossal amount that they may not be able to retire because, for example, my mom, she she retired early because they flat out told her, in the time that you have left to work, you will not make up the amount of money that you could possibly lose from your retirement. So she retired early. and but my two aunts right now, they all worked at the same hospital. My two aunts right now, who are younger sisters, they stayed, because they're not close like she was to retirement, and they have to ride out that hit. You know, um, I know we're a bit over time, but good conversation, right? So, um, I was watching, I can't remember which station, CNN maybe yesterday, and a lady, right? So this is the perfect example. We'll wrap it up on this of what's going on. Small business owner here in the United States produces baby products. Okay, produces baby products, uses manufacturing out of China. So typically with her orders, she's like, I'm about $30,000. I have to pay the duty, right? Whatever the tariff was previous, right? Have to pay that. So I had to come out of $30,000, $30,000 to get my supplies. She says now the same, and that's going to be higher now because of what China just did. But at the 84%, the 30,000 that she once needed to pay for those to get those products into the United States is now over $200,000. Over $200,000. And she said, I flat out don't have it. We don't have that. My house is already leveraged. She mortgaged her house to get the loans so she can get her products pushed into Walmart and other stores. So as of right now, she said, maybe 2 months of supplies, and then she technically will go out of business, which means that she will not have the money to pay her loans that she got through leveraging her house, which means ultimately you lose your house. That's devastating. That's devastating. So my only question was, after watching that in my mind, because they didn't ask it, was, who did you vote for? right? So that's just to bring it home, you know, how devastating this is to a lot of people. So while he's saying, oh, you have to take your medicine and short-term pain, people are losing everything that they worked for. Everything. Because of one man's decision. That's your NASDAQ 100, right? All of these look the same for the most part, right? All of them look the same. Here's your 1 hour, right? That UK 100 absorbed that spike, right? But we're still, you know, to the downside. But let's keep a close eye on things coming out of the UK and out of Europe, right? $92 million birthday celebration. Crazy. Crazy. All right. So let's continue to watch this, right? These, you know, everything coming out of the Eurozone. We know the euro is popping right now, you know, things going on with the pound. But for the most part, like Jeremy said, with that sentiment, man, across the globe, still structured to the downside for the most part. Still structured to the downside. Looking at the German, right? 30, again, 1 hour chart didn't hold up, right? But if we move up to that 4, right? We move up to that 4, we're moving down. This is one that's a good one. That German 30 out of the Eurozone, think about it here in the dollar. When you talk about it in the United States, he said it's now me against the world time. Yeah. So when you think about like in the United States, a lot of times we'll say that correlation, man, when you got a very strong dollar, sometimes you'll see that you're getting weakness in the stock market. Well, it's the same thing here. You got a very strong euro right now, right? So you may continue to see weakness with the euro. Or I mean with this German 30 moving to the downside. So just something to keep it. I know we're over time. I'm gonna wrap it up, everybody. Great discussion today. See what happens. Let's see what happens. Anything, you know, that you guys find that's important that you think can help the group, make sure that you post that in your community so we know any setups, you know, especially in the short term, you know, people that are looking for those type of setups. If you find something on those lower charts, post it. All right. Any questions before we wrap things up?
No, thank you.
A great rest of your day, everybody. Appreciate it, Reese. Hey, tomorrow, doing our session, remember, we've got Donette coming on and doing a pretty awesome training for us. So if you could jump on tomorrow, definitely join us. Bye for now.